Is a bond market shift, maybe like the one we saw about a month ago, is that still the biggest risk to you?
Well, I suppose it is. I mean, I think that really it's more inflation, and so we're starting to talk about inflation more, and I think that I think we're fighting the acceleration in growth due to the reopening, at least in the U.S. Does that offset any increase in inflation and yields on like the 10-year, for example? And I think about a month ago the market wasn't so sure. I think now, as we march steadily higher in the S&P 500, I think that growth seems to be winning the day. So I don't see inflation as an enormous risk right now. I think we can talk ourselves into a little bit of a frenzy as it relates to inflation and the resulting bond yields, but I don't see that as an enormous risk. I think that it's more the perception. I think the Fed has telegraphed the idea of an elevation in inflation and has tried to do a good job there, but I would look at taxes. I think taxes is definitely something that's not fully appreciated.
Yeah, and we're talking taxes, obviously. The negotiations continue on, and if they look like we might see a jump in corporate rates and or upper income individual rates, certainly that could be a market mover as well. But let's talk big tech, because one of the names, and you brought names for us, which we love, is a big tech company, but it's not one of the FANG stocks unless we add an E. What do you like about eBay?
eBay, yeah, it's funny because eBay, it brought me back to the good old days of 2000 when we talked about B2B and B2C and all of that. And I guess this younger generation doesn't fully appreciate that eBay was the non-fungible token of 2000. It was the hot item, the shiny object. And so, yeah, eBay, obviously 20 years later is quite relevant. They've, divested their StubHub and classifieds business. And so in our large growth fund, we look at return on capital and price to cash flow. And so, strong returns on capital, in roughly 50% and, about 16 times cash flow. They're growing, their gross merchandise volume has grown at a very nice clip in the last 12 months. So I think it's something that people forget about. I think we all know what eBay is, and we kind of forget that it's.
But I think it has shifted. I actually think I bought a pair of skis on eBay in like 1997, and I'm not kidding.
That's right.
Very quickly, speaking of 2000, and I'll say it in a good way, Oracle, another kind of, I don't want to say a name we've forgotten, but it's not a name that gets the attention it used to, especially because we haven't heard from Larry Ellison in a couple of years. Right.
Yeah, it's not Ant Financial exciting, but yeah, Oracle, they've been doing their thing, in the database market, and about a 30+% share in the relational database market. But again, it's a holding in our large growth fund, and very strong returns on capital, incredible free cash flow generation. Roughly 70% of their revenue is predictable and recurring. The support and maintenance revenue that a company like Oracle, gets from their customers. And I think that investors wait for growth to return. As more clients migrate to the cloud and more kind of application-oriented services are offered to clients and accepted. I think we get kind of that upside in eventual growth. I think they'll figure that out. But an incredibly compelling story, margin expansion and steady growth. So yeah, just as relevant now as ever.
Shepard Smith here. Thanks for watching CNBC on YouTube.